Hey everyone, welcome. Great to see you. Hey C Fazio, good to see you. Uh, let's get started with our post-market review. I'm a little worn out, a little tired, so I apologize if my voice, if I'm a little slow. It's been a long weekend with everything that's gone on. But it's good. Everything is good. Thank you everyone who inquired and sent your regards. My dad is doing much better, and looks like he'll make a full recovery pretty soon. So thank you everyone who sent me your well wishes. Let's take a look at what happened in the SPY yesterday. We talked about how we bounced off of this support level, and we did close above that EMA8 yesterday, but we still wanted to get another confirmation bar just to be really comfortable that we were actually going to bounce. So we did not get that confirmation bar, and in fact, we closed very close to the EMA20. And that makes it a little less likely that we're actually bouncing right here. What it means is it looks a little bit more like a chop sideways. So there's not a lot of force or momentum driving us upwards right now. And we want to be very careful about any longs or shorts, or that, I'm sorry, any longs that we might go into. Excuse me. So what we want to check out, we'll check out our volatility regime. We'll see what types of plays we want to go into. We will take a look at our sectors where money is or isn't moving, and then we're going to look at our market breadth. So our volatility, VIX, it's elevated, but below 20. We're at 1784. You can see we've popped up to these levels a couple times before. This time we did spike above that EMA20 and then come back down, and we haven't revisited. So it is so far looking somewhat like one of these days right here, something like this. So we could spike back up, but it doesn't look like this time around it's going to stay there for too long. So let's check out what January 13th through February 3rd will look like on the SPY. Okay, so January 13th was a local low all the way through February 3rd. You can see that it recovered, and then basically that was a chop sideways period. Okay, so we are on our way to recovery, but then what did I say? I said that it looks like we're going to chop sideways. So it looks like we might hit that chop sideways period a little bit sooner than we did in that last example. So we are in that sub 20 region, which is technically low volatility. If you want to call anything 15 and below low, and then 15 to 25 medium. Well, some people will say anything below 20 is low, and then 20 to 30-ish would be medium. It doesn't really matter. I mean, it's just the thin slicing. It depends on how you personally want to trade. But what I can tell you is that institutions will absolutely change their behavior above 20 for sure. I don't know that a whole bunch of them are changing their behavior at 15, but for sure at 20 they are. So VIX being around 18 at the moment, yeah, it's a little elevated, but for me, that's not an entire change in the regime yet. So I'm still going to be pretty comfortable with pullbacks. And if this EMA20 holds tomorrow, then we could see the chop being right in between. Let me draw it right here, that all-time high or somewhere near. We could reach another all-time high, but probably not significantly above it. And then we would chop in this area right here. We could just chop a little bit lower and something like that. But, you know, tomato. We're not trying to design super tight trades or trades that are so dependent on pinning at certain levels. So I always like to make myself a little bit of room, and so that's what I would be looking at right now at the moment. I would even pull this down a little bit. You can see that these lows off of this sideways chop And yesterday or 2 days ago, the low, there are very similar levels. So I would be somewhere around here, something like that. So we're looking at about 617 and a half, let's call it. I might as well put in official levels here. And then 639.25, I'll give myself a little bit more leeway, 639.5 or even 640, because that is an actual strike and an actual where options market makers would have exposure. So 617 and a half to 640, if I wanted to do the same thing and give myself, be a little bit more conservative and go to an actual option strike, then we'd be looking at 617. Okay. So that's what I'm looking at the moment. It looks like we might have this chop going sideways. That's not necessarily super great for directional trades, but if you're taking your profits earlier, or you're not going to expect a long run upwards, then we're doing okay. And in the case of right now, our volatility isn't super high. We're still sub 20. You can leave that stop loss in place and not expect to just get swung out randomly. So if you did directional plays, we would definitely looking at relative strength, so to the S&P, and sector strength relative to the S&P as well. If we take a look at, I forgot to do this, if we take a look at what Gamma did today, you can see that we ended right around 627 was where that huge exposure was. And I didn't call that out during the day because it didn't really change that much from the morning. We already had 627. It basically, what happened was from those upper levels, everything got shoved down into that 627. Same with that SPX, all of this exposure shoved down. We didn't experience anything new. 62.95 was the main exposure level. And so basically what, if we do SPX, the low was 62.89, and we closed right next to that, pretty close to 62.95 at 62.99.2. So what I said was sideways chop because of the way that the gamma looked this morning. It just so happened that we ended near the bottom range of that sideways chop. So if we take a look at what S&P actually looked like, or SPY actually looked like, yeah, it's sold off and then a sideways chop in between. Well, that lower level was definitely good, and then the upper level was tagged super early, and then all of that started to shove lower down. So I didn't see any need to update because it was a sideways chop, and that's kind of what we're going to expect in the near future until we see something change. So that gives us our volatility regime, the types of trades that we want to look for. Hi, Nestor. Good to see you. Hi, Kay. My dad is doing much better. Yeah, thank you. Thank you very much. So we will take a look at where money is moving or where it has moved, and just to see if there's anything to be gleaned right there. Before I do that, well, yeah, no, let's do that next. So, hi, Vladimir. So in our sectors, we saw a focus on metals, nuclear, shipping, lithium. So lithium, nuclear, and even metals, those are kind of all in the same theme right here. Basically alternative energy, and in this case, alternative energy, not meaning solar, but in terms of batteries, of nuclear energy, all three of these are involved in that. And then we got shipping. We had shipping last week also, which is kind of interesting that it's showing. You see there, it's still in the 1 week now, and now it's even in the 1 month. So I'm definitely going to take a closer look at shipping. So I'm going to make a note to take a look there. It looks like we got XME, URA, lithium on these two and over here as well. So cars extending out into electric vehicles as well. And then we have that over here in the 2-month. And we have URA and XME, not lithium though, in the 3-month. Then we've got the nuclear. So we should be taking a look at nuclear, URA, XME. We want to see if anything, if that's broadened out to just beyond the, I think it was MP, was the symbol that everyone had piled into because of the Department of Defense going into it. And so I want to, we've even got boat over here on a 6-month basis. That's interesting. So that's definitely something that we'll want to look at. And I thought there was one more. Let me see. Oh, we'll take a look at lithium because it's showing up on all the earlier ones. The 1 day, 1 month, 1 week, 1 month, 2-month. And so if there's continued interest, then it will show up on the 3 and then eventually the 6 months. So we'll take a look at that as well. So basically, I want to see how those are doing relative to the S&P 500. So let's take a look at SPY boat. That's interesting. SPY divided by boat. Oh, got down. No, okay, that's the direction we expect. Yeah, because boat did very well today, so relative to S&P 500. So let me do it the other way around. So we're used to saying, do we think that value in money is going into boat? And the answer is yeah. It's breaking an downtrend right here. It's looking like it's about to make a new trend. So boat is very interesting. URA divided by SPY. Definitely looking very good. A nice trend here, pulled back to that EMA50 and bounce upward, confirmed twice to make it above both the EMA20 and EMA8. And that EMA8 is starting to curve upwards to match the EMA50. So URA definitely looking good as a sector. XME divided by SPY. Similar thing right here on XME, and LIT divided by SPY. Similar, but we're still below that MA200. Okay, the moving averages are going to be a little bit less meaningful. So it's basically the lithium divided by the SPY, not lithium divided by US dollars. So, but it does, the relationship, the meaning of that moving average is still impactful. It's just that institutions are not necessarily making their decisions based on where these prices are or where it's priced relative to S&P 500. They'll still make their decisions based on where it's priced in US dollars. But the meaning of those moving averages, especially as indicators of a trend, still is very meaningful. So let's take a look at them priced in US dollars. So we've got boat looking good, very good. It's just hitting a little bit of resistance right there, but if it can carry upwards, a boat is looking very, very good. We've got a nice separation starting to happen among the moving averages. It is starting to curve upwards, so we will take a look at individual stocks in shipping. URA, same thing, looking very, very good. And then XME, same thing, looking great. This is looking kind of like a little like S&P 500 in general, right? It pulled back to an area of support, bounced. So if the S&P had done this today, where it had a green bar and it broke back above its EMA8 and above the previous day, and it's curling, that EMA8 is curling upward, I'd be way more bullish on S&P, but it didn't. And metals is doing that. Wonder what happened to gold. Gold, okay, not too much. Looks like it's trading in a channel right here. Okay, and we're kind of mid-channel. So I wouldn't be going into gold. I wouldn't be selling gold either. Maybe a nice income play, maybe an iron condor around that, since this is pretty close to the middle. That might be an interesting play. And let's take a look at lithium, or LIT. So LIT, again, this is, when we looked at it in terms of SPY, it was still below its EMA200, but now when we look at it in terms of dollars, it's definitely above it. And you can see that it went very strong momentum above the EMA200, pulled all the way back to it and bounced off of it the next 2 days, the last 2 days, to the point where today now both the EMA8 and the EMA20 curled upwards on the same day today. So if we use that EMA50 as that longer term uptrend, it curled upwards way back here in June, at the end of June. So this is now turning to match the longer term trend, not the EMA200, but the EMA50. So lithium is starting to look very interesting as well. Let's take a look at our breadth, and then we can decide if there's some more traditional sectors to look at. But everything that we've looked at so far is looking very, very good. And you know what, before I do that, I want to see, because what this is implying is that the tech and chips are no longer leading. And if that's the case, then we're not super risk on anymore, which is another support for the market chopping sideways, or maybe mildly rising, but mostly chopping sideways. And we want to see that blend of the SPY, the RSP. So RSP bounced off its MA50, but got stopped. It hit resistance at that EMA20 and EMA8, and also all of this over here, which coincides to all of this over here. So that's probably going to be pretty tough for RSP. So if RSP chops sideways and we're seeing not a lot of activity in the tech and SMH, then we're gonna see the overall markets chop sideways as well. Let's look at QQQ and versus QQQE. QQQ looking very similar to SPY. QQQE looking very similar to RSP. So everything that we just said applies. IWM, small cap, looking a little bit better than the SPY and QQQ. If we had seen this in either of those two, then we'd be more optimistic. It's interesting that smaller cap is looking a little bit stronger than SPY and QQQ. So we need to, we'll need to be careful, because if we are risk on in terms of small caps and these start leading early before the SPY and QQQ, that's actually very bullish. So we'll definitely want to watch that very carefully. That's the one thing that is a little bit out of alignment in everything that we've seen so far. Dow Jones is looking very similar to SPY QQQ. So let's take a look at our breadth. So that means our momentum levels. So let's bar chart. Momentum. Oh, sorry, performance. Yeah, everything on the 20-day is looking kind of ugly. It looks like utilities are way overdone right here. Look at this, 20, 50, 100, 150, 200. So that's interesting to note. So we'll take a look at that a little bit more carefully. And a lot of these are sub 50%, significantly below 50% on the 200-day. So the ones that are not are consumer discretionary, financials, industrials, tech, communications. Interesting. So basically, mostly the more speculative ones are doing okay still, but the rest of them are not looking all that great. It's an interesting mix because either one of they have to resolve. They don't have to resolve immediately, but they have to resolve at some point in time, which means that overall, it's basically showing we're seeing overall weakness in the market, except the speculative sectors are doing okay. So either we're bouncing from something really bad and going up, or we're going down, but we're just kind of in denial. And the fact that we didn't even pull back that much, we basically went just below that EMA20 and then bounced immediately. That is suggestive. We're not coming from really low levels and coming back up. We're not coming from below the EMA50 and up, or hit the EMA200 and up. That's a picture that's what we would expect to see if we were bouncing off of the EMA50 or EMA200. But we're just kind of in between the EMA20 and EMA50, really. So this pullback, if we go from peak to right there, was 3.3%, very minor. And we didn't even really, the real gap down was from right here. Okay, so that was about 2%. So basically, that's not giving me a lot of comfort. So it doesn't seem like there's a lot of strength in this market right now. So I definitely want to be very careful going longs. Utilities looks like an interesting potential short sector. So let me look at that more carefully. Wrong one, XLU. So we hit a high right here, an all-time high, and then we're pulling back from it. That's interesting because we don't really want to go counter trend. I wish I had a volatility index specifically for XLU. I programmed something. Fall. There we go. That's the one I programmed. Okay, and that one is not showing the extreme volatility. Yeah, so I'm not comfortable going short XLU yet. It's showing that trend is really strong. We don't want to go counter trend. We're not seeing a really high implied volatility. We are seeing increasing volatility, not implied volatility, an approximation of implied volatility. Let's see what Maverick says. Yeah, it could go more. Okay, yeah, now it's not the right time to go short XLU. It is, that momentum is getting really stretched though. Okay, so I'll keep that on my list to watch. At some point, that's going to start pulling back. I mean, maybe today was the start of it, but it would be way too presumptuous, like way too predictive of me to speculate on XLU short right now. Okay, so let's take a look at boat, lithium, boat, URA, and XME. I like all of them. XME, I just want to make sure it's not being driven by a single name. So let's take a look at that one first. MP. Very strong still. And breaking out of this sideways range that it was in. So I broke out of that box. So that's looking strong. That's a breakout. So breakout, I'm not going to chase it, especially not in the current environment. I would let it go up and then pull back, hopefully back to the top of this box, and then potentially bounce. And let's see how CLF, HCC, and UE, not as strong. Okay, not great, has earnings. Newmont, looking very strong. Another break, pullback, bounce, and breakout. Okay, it's a little too concentrated for my taste, so I'm gonna strike XME off my list. Let's take a look at URA. And basically what I'm looking for is something that is just moving very cleanly, very smoothly. And I might not find it. There might not be any of these that are doing that. OKLO, SMR. Oh, look at that. Nice trend, and very volatile though. Very, very volatile, but trending, and a nice movement upwards today. So we see this happens in OKLO a lot. Gap up, move, chop sideways, gap up, move, chop sideways, then pull back. It's a nice little surge. This one continued, then pulled back, another surge, chop sideways, another surge. So what that tells me is that if I see a chop sideways or a pullback, then I want to get in on it. And that chop sideways will have a bottom range. Then I can look at that bottom range. It might be, so this one's like halfway on this surge candle, same with this one. So I'd be looking to see if it does a chop sideways over here with lows along this. And if it does, or then when it hits the EMA8, I might consider going in. Like that EMA8 will continue to come up. I might consider going in to something like OKLO. NMR? No. SMR. SMR. Yeah, no. NNE. Okay, today that EMA8 started moving upwards, same with the EMA20. So today, if we could have gotten in earlier, that would have been a good entry. This again is very choppy, very wicky, and volatile. So again, you want to try to catch these things on the lower end of these bars because they move so much in a single day. Okay, let's see. Anything else? UEC, LEU. Oh, that one looks very good. A lot less wicky than the others, but too late. It moves so much in a day. It's very hard. You have to get really good timing on these. So we're not going to be able to catch these after market hours. You'd have to catch them during the day. Yeah. So I'm probably going to strike that off my list for now, just because entry is difficult. And then LIT. We've got Albemarle. Not very interesting. SQM Tesla. And Lucid, that's interesting. SQM. Tesla, Lucid. And none of these look all that interesting. So something must be carrying this. Lite. No, there's everything else is ENS. Huh. I can't see any component carrying this. So this is something that I would only be interested in the ETF, which is unusual. Gappy stock or Gappy ETF. So that's something to be aware of. Okay, so it looks like boat is my best bet. No constituents available. We were able to see constituents before. It's mostly not US. I don't remember that being the case when we looked at this earlier. Whatever. MATX, FRO, CICOF. Those were all tough to get into. SBLK, STNG, okay. Now we're talking STNG. There we go. Nice little break above the MA50, the moving averages separating and actually going a little parabolic here, STNG. I'd wait for a pullback, maybe near the MA200, maybe to that EMA8. So I'm going to put STNG on my watch list. Oh, we can check out our TJ Maxx. I almost forgot about those. Okay, STNG, SBLK. Okay, looking good. Yesterday would have been really good. We kind of, oh, but we have earnings, so we can wait on that. I'll throw that on the watch list. And let's see if there's any others here. INSW, ZIM. Yeah, earnings. And it went a little parabolic. ZIM definitely not. DHT, DAC. A lot of earnings. This one's past earnings. Very volatile though, Wiki. And then GOGL. A little low dollar, but breaking out of its MA200. We'll see if it pulls back to retest it. Then we've got earnings coming up. It's probably not going to, this would be something that maybe, I mean, technically this is in the category of a penny stock, sub $10. So, we can, I'm going to keep it off my list. Okay, so that's the top 25. All right, so we got two to look at for potential entries or potential watches. And then let's take a look at our TJ Maxx. Right, this is our upcoming earnings trade, and see it did actually go directional. Well, yesterday was really big. So let's take a look at, and I think we were thinking like $1, 130, right? Let's take a look at our option strat on our save trades. Okay, look at that. That looks unrealistic. That doesn't look right, but we'll take a look anyways. So our first is our butterfly. So our butterfly looks like we're right next to that 129. So it happened too fast. Unfortunately for the butterfly, we would be closing this butterfly right now. We'd be taking profits on it. So at about a 15 to 20% gain right here, but about 15% gain. But nice little earnings play right there. Happened way faster than I anticipated. So this one would be closed at 15%. I'll just close that. Okay, our bull call, look at that. That curve is crazy. So the market is completely mispricing this. This is probably a wide bid-ask spread, because you see the curve should always fit below the maximum. At no point in time will the market actually allow you to sell for more than the maximum profit. If you try to do it, the market maker just would never execute you. So, we say, and then plus this 100% is 100% of max profit, not of return on your risk. Although in this case, they're pretty similar levels, right? So the max profit was not quite 100% because the max loss was very low. So let's take a look. I want to see how liquid or how wide those bid-ask spreads are. Out to August 22nd, 124, 125. Okay, yeah, it's pretty wide. 90 cents right there, $1.25 right there. So those are really wide. So you might be able to get close, just say like 90% or 95% full profit. You wouldn't be able to make over 100% of full profit. So this one did really well because of the speed at which and how far above the break-even point we are over here. So this one, we would call it, just say within $5. So just say 37.50 over 57.50. So that's a 65% return. So not bad. That was a great trade right there. And then our call, our simple long call, is making about 28% so far. So the butterfly and the bull call spread definitely would have taken profits by now, 65% and 15%. This long call, simple long call, 28% so far. And you could choose to continue to hold it up until earnings, but with that big of a move, generally it's consolidation or pullback. So do you really want to hold it through and lose time value, or pull back? If it was pulled back, it might be worth it for another leg up, but generally I'd probably take the profit and run. So I'm going to consider all these closed and all of them successful earnings play that just went way faster than I would have anticipated. Okay. All right, so we'll keep a careful eye on boat, and specifically STNG and SBLK for potential entry entry opportunities. Okay, so we got our idea, our trade idea, and which is that money is moving into shipping. We said that with all of the trade tariffs starting to at least show signs that they're going to be resolved, shipping will be front and center of international trade. So that might start flowing again. So that would be the trade idea, the premise behind it. We are seeing money flowing into that sector. It is becoming a strong sector in more and more time frames. And then the timing is not quite yet. Okay, so we are at the trade idea looks good. We're just waiting for the timing at this point. All right. So that is looking good. We've got our watch list. We've got the sector that we're most comfortable with. We're not terribly bullish on the S&P or the overall markets. It looks like maybe a somewhat wide range chop right here. That's probably the most likely scenario. So no longer gung-ho bullish, definitely not bearish. So just a little chop sideways. And we'll see how everything plays out. If you have any questions, if you want me to go over anything tomorrow, just let me know. Send me an email at kane@investpub.com. Otherwise, have a wonderful rest of your night, and I will see you guys tomorrow. Should we stay away from wide bid-ask spreads? Yes, absolutely. Liquidity, to me, liquidity is king. I want to know that unless I'm holding it, I know for sure that I'm holding it to expiration or very close to expiration, then I absolutely want that liquidity. Can we look at an iron condor on GLD? And what did AMD do? Okay, sure, we can do that. Let's take a look at AMD. Ooh, not looking good. Not looking good. But AMD, so the what we saw earlier is that the tech and SMH is less important in the market right now at this particular moment in time. So let's take a look at what this is doing to SMH. Yeah, that's near the bottoms, near the lows of today. And then what's that doing to MAGS? MAGS is well below. If we look at SPY, not too much, right? So it's affecting SMH for sure. So far, not really affecting SPY. Okay, so yeah, the chips, the tech is just not as important in SP500 at this moment in time. If we look at QQQ, you see it had a larger effect on QQQ than it did SPY. SPY is very broad at the moment. The focus is very broad, so it's not having as strong as an effect. Okay, and I'm looking at AMD right now, Omar. I don't know if you typed out or if we had a delay. And then gold. Someone asked gold iron condor. Yeah, we can. So we did mention that a gold iron condor could be a good idea. So 300 to 316. Let's see. Let's see if I want to say a week and a half trade. Would be next Friday, which is the 15th, monthly expiration. So if we did, was it 300 to 3? Yeah, 300. These are calls. So just try 316 for now. I do that wrong? 316 sell buy. Yeah, I got them backwards. $0.32. That's not bad. So that's 2-to-1 or 1-to-2 reward risk for something that's a couple weeks away, a week and a half away. Let's model that up on option strat. Okay, so what we're saying is as long as it stays in between 299.68 and 316.32, okay, then that becomes full profit. Now, yeah, so as long as we keep chopping, plus it just has to do it to August 15th. Man, that looks like a pretty easy trade. There is a argument that maybe a slight bullish bias if we're going to have a breakdown in the S&P and we have a flight to safety. But we're not seeing that right now, right? SPY, we're also thinking that it's going to chop in a range. So GLD, if we can get paid that much, okay, so yeah, it's roughly a 1-to-2 reward risk ratio, 66% chance of profit. I'll teach you guys something new. That's a good teaching opportunity. I like this. So how do I evaluate this? Because if I just go by the pricing model that the market makers use, which is what this is, everyone uses like some riff off of Black-Scholes or Birkenstens, I don't know how to pronounce it, but there's a few classic models that the entire market uses. And they all come out with very similar conclusions. So the market maker is always going to price it in a way that there's no edge for people who are buying or selling the options. And they don't care because they don't care if they don't have an edge, because they're making the bid-ask spread. So they're still making money. So what they want, their risk is the least when there's basically zero edge, okay? So over here, we're modeling a 66% chance of profit. So if I get out a spreadsheet, and I say there's a 66% chance of winning, that means there's a 34% chance of losing, and I have a 66% chance of winning $32 and a 34% chance of losing $68, and then I multiply this out, okay, and I subtract these, okay, then my expectancy in this iron condor is that if I do this many times, like if I was able to do the exact same iron condor 100 times, my expectation at the end of that 100 times would be that I would have lost $200, $2 per trade, okay? So this is not profitable for me according to the market makers, the pricing models. For them, they're doing the opposite. So for them, on average, they would make $2 every single time we traded. So it's profitable for them. So we might go, oh, well, Kane, if I literally price everything out, my expectancy is going to be zero or against me. So, basically, are we saying that we should never trade these? And the answer is no, because those models are not perfect, and there are other ways of evaluating your risk. So what we're going to do is called a equal move ratio. So if gold moves up $1, how much what's the max I can make or max I can lose? So let's do this. Oh no, we have time. We have 10 minutes. Okay, let's do this. Okay, so let's go over here. Okay, so if we move $1, then what happens? We go to 312.16, and I make my full profit. So I make $32, and if we go down $1, then we go to 310.16, and I make $32. Okay. If I go up and down $2, then at $2, we're at 313.16. I make $32. And then if we go down $2, I definitely make, because we're off center here, I make also $32. If we go up and down $3, then $3 is 314, 315. So basically $4 and $3 are going to have the same result. I'm still going to make 32. Okay. $5. Okay. At $5, this goes to 311.16. Okay. And at that point in time, I lose 16 off of my max profit. So I make $16. If we go down $5, I still make $32. $6 and minus $6. Okay. Then over here, I am in my max loss territory. $6 would be 317.16, and my max loss is 317. So yes, so here I lose 68, and here I would still make 32. Okay. So this is the point at which the reward risk ratio goes against me. It is no longer in my favor. Okay. All of these are positive. No, doesn't matter if it moves up or down $1, up or down $2, $3, $4, $5. I make money either way. So actually all of these are great. $6 puts me in a disfavorable reward risk ratio. So what I want to know then is, what is the probability of us staying within a $6 range? And so I can go over here and then look at what that market maker is telling me. On a $6 range would be what is this? 305.16. So just call it 305. Okay, so probability of this going below that is 20%. And then the probability of us going above 317 is 25%. So it's telling me that there is only about a 45% combined probability of me hitting a disfavorable result. So that is slightly in my favor. It's about 5% in my favor of me staying in a very favorable reward risk ratio. Okay, so this is actually in my favor. Right? So not hugely in my favor, but it's in my favor. Okay, so that's how I get around the pricing options models always reporting to me that everything's always not in my favor. Okay, as long as everything it moves less than $6, and we'll just say $5 or less, then that is a very favorable outcome for me. So what I can do then is now I can manage my trades, right? I can go and say, if at any point in time this trade goes outside of that $5 bound, okay, so at 316.16, and at $5, 31306. Okay. So if we go outside of this range, Jack Carter would call this this concept tripwire concept. If this goes below 306.16 or above 316.16, then I'm just going to close the trade. Okay, and that would minimize my losses. Obviously here it's a little too much protection because we weren't centered inside of this range. And so I could move my iron condor closer and then actually get paid a lot more. And I would still have the same EMR. Okay, so same risk because equal movement ratio. So we could do that and I could get paid even more. It'd be even better, an even better trade. And then if we go beyond 306.16 or 316.16, then immediately just close the trade and take your loss. Don't suffer the max loss. So we can do that. Let's go and pull this tighter to 306 and 305, and then it becomes a 1-to-1 right there. So clearly the EMR is going to be way, way, way better on this. Or actually, it's the same. Sorry, it's the same because we don't lose. Here, I'll do this. Okay, at -5, that is 16, or sorry, at +5, that's 16, and at -5, that puts that at 306.16. Okay, so that's still inside our max loss, or max gain, because our max gain starts at 306, so that's 16 cents inside our max gain. So this is the exact same, and this one then changes to -68, and then $6 below this would be 305.16. And so that would be just $16 shy of our max loss. So this would be minus, I don't know, my head's really groggy right now. I'm sorry, I'm going to do this. I should be able to have that in half a second, but I'm dehydrated and I'm lack of sleep. What am I doing? 52 minus 16. Okay, 36, minus 36. Okay, so this is definitely not in my favor. So we would want to stay inside that $5 range. So the moment we go outside that $5 range, we shut it down, we take our losses. And that's in that way, we make this a much better reward risk ratio and a high expectancy trade. Okay, so that is one way of creating an iron condor around GLD. Okay, just know that your win rate though, so the market thinks that you have a 50% chance of profit because they think it could blow out or it could stay inside. But based on EMR, even if they're right about that 50% chance, the reward risk ratio is in your favor. Okay, so it's no guarantee of winning. Okay, it's just that if you were able to set up this type of trade over and over and over and over and over and over and over again, you would have a very positive expectancy. So across many trades, the expectancy would be that you would be net profitable. Okay. All right, guys, what do I prefer, Brave versus Firefox? Brave blocks a lot of ads and pop-ups and trackers. So I just it loads things a little bit faster, a little bit more stable. That's it. No, I don't have a huge preference for Brave, but I do like that it blocks a lot of those pop-ups for me. Yeah. Okay. All right. Hope you guys are learning a lot. We'll end it right there. We're right on the 1 hour mark. So have a wonderful rest of your day, and I will see you all tomorrow.